Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. Welcome back to the show, Mark, and Merry Christmas.
And Merry Christmas to you and everyone out there, and let's all hope for a safe and Happy New Year as well.
Are we ending the year with a special offer?
Let's do it. We have VRTrader.com, and we have the promo code of 2021 half off. Obviously, in 2022, we're going to have to revisit that, so the code is 2021 half off. When you go to VRTrader.com, you enter that in the promo code section of any of the newsletters you wish to subscribe to. And I also want to say up front as a disclosure, I'm not a financial advisor, and I don't give financial advice. I'm a newsletter writer, and we do this for educational purposes.
Mark, the S&P hit a record high this week. The other indices, not so much. What's the story there?
Oh, well, that's a tough call. You're getting a little bit of a divergence. Just 3 days ago, everybody thought we were going off the cliff. And suddenly the Santa Claus rally unfolds, which, generally makes sense because the Santa Claus rally can occur any time in December. So, and also there's this tendency in the markets, if the markets are sort of trending down and you go into a holiday period, markets tend to reverse 2 or 3 days ahead of the holiday period and do sort of a contra, in this case, a contra rally. So you can interpret it bearishly that it's sort of a pre-holiday type phenomenon. This is not carved in stone, but I have noticed that many times over the years. So after the holiday or into New Year, you could theoretically come off again. And I guess that would be supported by the fact that it was a Santa Claus rally and we did experience the kind of divergence that you just indicated. But I'm not really all that bearish per se. I mean, I thought we were going to get a shake into a little bit of a correction into the end of the year. We got mixed correction, some stocks doing worse than others, and we know a few big names in the NASDAQ have been holding up the market for months, and for the majority of stocks in the S&P, I think the number is like for the year you're up 6%, but if you take out the big names, and with the big names you're up 20%, so it's mostly a handful of names that have really supported the indexes, and I guess if you're an index buyer and you own an ETF, you're very happy because those were included in the index, but the average stock, didn't do as well. So, we are sort of long in the tooth in a sense after a huge rally, and everybody's concerned what the Fed's going to do and not do. I look at geocosmic and a lot of other stuff besides what the Fed is doing. And, of course, this virus situation, if you believe it or not, is out there. But, to me, it's like how many Greek letters are there in the Greek alphabet and how many more of these, so-called viruses can be spread around. And, it's flu season and you got to take care of yourself. So, there are a lot of variables, including Iran, including Taiwan, China. What's going to happen there, and Russia, Ukraine, and there's all these reasons that maybe when we look back, or just the market climbing a wall of worry, as Joe Granville used to talk about decades ago. So, got to be selective. I mean, look at Tesla, for example. I mean, we dropped from $1,200 a share down to $909, which, by the way, was our exact buy point, which we did buy or recommended for our educational service, and it popped right after it was like a bullseye for those who followed our service. It just a perfect call there. You don't get them every day, but I'm proud of that one. But names like Tesla are still growing. It's a real company, and Elon Musk is the Edison of our time, so you got to own something like that if you want to participate in all the technology out there. So going back to my original comment, I mean, I'm not really a bear, I don't think the Fed's going to do anything dramatic. I guess it's going to scare the heck out of everyone. I mean, we've talked about it. I mean, rates are still ridiculously low, and even if they go up a little bit, what the heck does that really mean? Really, it's more of a question of the consumer, how people are going to react. Food prices are going up. I know the soybeans are starting to rally here a little bit. So it could be increased food costs and so forth. So, the consumer, how they respond might affect the markets more, over the short term. So we'll just have to watch the numbers. And I don't want to be too long-winded, but, we have January coming up. And I watch, as I have since 1987, the January barometer, which says the first 5 days of the year, according to the inspiration coming from Yale Hirsch, who created this back in the 1970s. The first 5 days could be a leading indicator for the year as compared to the close on December 31st, and the whole month could be a leading indicator. So you got to watch the first 5 days in the month to see if you're getting any sense of the so-called January barometer. So that's something we're going to be watching as well. So, what can I say? Bottom line is going to be trading opportunities. Gold looks like it's oversold. Needs to bounce a little bit here, maybe even have a bigger run into next year. Some of the U.S.-based cannabis stocks are starting to come off some lows here, which have been under pressure for many months. So those sort of look interesting. Agricultural stuff like the soybeans I just mentioned look interesting. And there's always going to be some trades along the way. So unless there's some really significant war situation or geocosmic event like a giant solar flare that knocks out the electromagnetic pulses all over the planet or something, I think there's going to be some possibility of still markets trying to move higher, or at least there's going to be selective stocks that we could take advantage of. And of course, if big volume comes in and we start breaking support, particularly the lows we saw in September, then we'll have to start reevaluating. Then maybe a little bear cycle is starting, and we'll react accordingly. Remember, our service is vrtrader.com, so I don't want to get caught in any scenario that doesn't confirm, what the technicals are saying. You can only be right so long as you don't go broke first, as they say. So you've got to just sort of follow stuff. But I still see plenty of opportunity, and we'll plod along into the new year.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, some people I've talked to are very concerned that we have record margin debt, and if the market takes a major dip, people are going to have to liquidate a lot of stocks to meet those margin calls, and liquidity will become a crisis.
Well, this is always the case when the market has a significant correction. It happened in March of 2020, on the COVID thing. A lot of the selling was attributed to margin selling as well. I can't verify that information that you've given me. There's always a lot of margin debt out there. There's a lot of leverage. So I don't know if this time is any different than any others. But sure, if the market starts to break support and selling unfolds, they throw the baby out with the bathwater. Gold will come down. I mean, people have to liquidate to raise capital. So I'm not sitting here worrying about it. I know the market is very extended, and we do have a risk at any time, based on some event or, other trigger that we get a sharp, 10-20% sell-off. But look what, in March 2020, we had a huge one, and the market, did work its way back up. And, I'm still a big believer in the manipulation of the markets. We've got the plunge protection team out there, which is run by the, Treasury and the Federal Reserve. And we talked about this, a little ad nauseum on these interviews. Everybody talks about interest rates and tapering and stuff, but they don't talk about the fact the government is in there buying the futures markets and buying individual stocks to support the market. We know this occurs both in Japan and China, and central banks probably in Europe are doing the same thing. I believe they are. So, what does that mean? So you have a correction, but, they support the market, and it comes roaring back. And frankly, as a trader, I love when they kill them. I mean, honestly, when I see the stock down or the market down big, and it hits a big support level, a 50-day or 200-day moving average, for example, and hits a corrective level that I've been looking for, I try to jump in on these opportunities. And over the years, I just sort of drool over the opportunity when they really kill, a market, whether it's the overall market or a sector in the market, and that presents, huge buying opportunity. And then I'm a little on the conspiratorial side because I've been a trader for so many years, but I think a lot of those big shakeouts are engineered for a reason, because the big players want to buy stocks cheap, so they knock them down, and sometimes they come out with bad news to drive them down, just as they come out with good news to drive them up. So there's a greed factor here and a little bit of a manipulative action that occurs in the markets that I've observed over the decades, and others would concur with this. So, you just have to sort of play the swings. And so your margin debt question is not sitting here worrying me. It's something that's always out there, Jim. We've always had margin debt selling when the market starts to come down, and we'll just have to see if it's more significant this time if we get a shakeout than any other time in the past. So I'm not losing sleep over it. I mean, what you have to be more concerned about is that what the risk reward is for your portfolio. You want to buy a market that's been straight up for the last couple of years, or you want to wait for some type of pullback, or at least you want to get into sectors that are already down, like I mentioned, the gold and precious metals, or the agricultural sectors, or the cannabis sectors, and others we're going to hopefully identify along the way, and then play the odds that if you're buying something that's already down a little bit, you've reduced your risk.
Mark, what's going on the cryptocurrency front?
Coming back a little bit. We had a little bit of a shakeout. And that's all I think it is. I'm taking like a 5-year perspective on this. I think we're still early. I think the bears are still out there thinking that it's all going to zero when it's not. It's a huge, capital move. The biggest investors on the planet are involved in one or more cryptos. And, Bitcoin might be $1 million by the time this is over. Who knows? Ethereum looks good. There's so many individual ones. If you check, there's several thousand of them, and any given day, some of these are up 20, 50, or 100%, sometimes 300 or 400%. If you can follow some of the more volatile, cheaper ones, you've got Elon Musk behind Dogecoin and Shiba Inu and Shiba Inu girlfriend and all these fun things that are out there. But when companies start accepting these coins, like AMC Theaters, for example, and even Musk himself at Tesla. And I can use a whole list of companies that are accepting coins as currency. How can you argue that it's not going to continue? I mean, they're accepting them as money, and was money going away that fast? So I don't, this is the move into alternate currency, the distrust of government, distrust of, concern about inflationary forces, the hopeful aspect of making money on the coins themselves. So my gut feeling, I'm speaking long-winded here. I mean, we had a little shakeout. As far as I'm concerned, they could have turned here and maybe even start attacking their highs again in the next few weeks. But we're long here, so we're hoping that we do see an advance. And again, I'm taking a multi-year perspective. We're still early in the process, but you got to be prepared for volatility if you're trading these coins. That's really the bottom line, and they got to represent a very small portion of your investment portfolio or your trading portfolio, because they will move. But you can trade them technically too, just like stocks. You wait for the shakeouts. Ethereum and Bitcoin just had a big shakeout up to a few days ago. Now they're trying to start and rally back. So look at the charts, wait for the shakeout, and get in. Don't chase them into new highs. Use a little common sense.
Mark, have a great Christmas.
Merry Christmas. Happy New Year. Thank you, Jim.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Have yourselves a great holiday.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.